Hello, everyone. Welcome to another edition of our More Than Market series. My name is Shalon Williams, Director of Investment Management Services here at NEI Investments. So last week, John Bays spoke about NEI's outlook for economies and markets in an era of rapid change. Today, I'll speak about equity market volatility and earnings. So since the start of the year, we have seen a lot of market volatility, in part due to the removal of accommodation by central banks and also some tail risk arising from the Russia-Ukraine war. Last month was no different. Developed market equities had a really tough month as investors weighed the impact of the aggressive language coming out of major central banks and what that could mean for the economy and what that could mean for earnings. Technology stocks have been taking a hit from rising interest rates and compressed valuations. And what will keep technology stocks afloat and stocks generally will be earnings. We're moving away from an environment where rising tides lift, all boats, since there is no longer monetary and fiscal accommodation. And we're now moving to an environment that will be laser focused on earnings and fundamentals, where companies that are able to churn out good earnings will be rewarded. And on the topic of earnings, in the US, of the 233 companies in the S&P 500 that have announced results since this quarter, 80% of those have posted better than expected earnings, as compared to 83% for the whole season a year ago. About 16% missed analyst EPS estimates compared to 15% a year ago. So companies are beating estimates, though there's just a slight fall off from last year. We still see this as a very encouraging sign given the backdrop of higher levels of inflation and less monetary and fiscal accommodation. Consumer staples, industrials are topping estimates the most on a per share basis. And as interest rates rise and as economic growth moderates, companies that are able to post profits and beat estimates will be rewarded by the market, whereas those that miss those estimates will be punished to a greater extent than those that are rewarded for beating expectations. So as a result, this could set the stage for even greater level of volatility, with eyes being really laser focused on earnings and fundamentals. And what we saw very recently on Friday, Amazon closed 14% lower on Friday after the company gave its revenue outlook for the quarter that fell short of estimates. Amazon projects revenue between 116 billion to 121 billion in the second quarter. Amazon, if you remember, it was a pandemic darling, but as the economy reopens and as customers re-enter their brick and mortar stores, that will pose some headwinds for that company. So in this environment, active management will be very critical in order to scope out the pockets of real opportunities. At NEI, our investments team is really focused on making moves in our tactical portfolios when we sight opportunities. When we see price corrections, that will provide us with the opportunities to enter the market. And on the matter of earnings, as I alluded to not too long ago, we still see earnings growth about 10% this year and also next year. And then just back to the point about finding pockets of opportunities, we think that a big theme that will play out this year as economies focus on decarbonizing, that will be a huge theme. And some of our thematic funds, such as our Clean Infrastructure Fund and our Environmental Leaders Fund, are really absolutely positioned for that move. In terms of long-term investing, yes, market volatility can absolutely be stomach churning, but from a historical standpoint, this is really not abnormal what we're seeing now. If you have a diversified portfolio that is aligned with your time horizon, then the current level of volatility and the disruptions that you're now seeing in the market will not put your plans off track, should not derail your long-term investment plans. So with that, I'll stop here and say thank you for tuning in. Hope you found today's discussion particularly helpful. Watch out for next week's More Than Markets series. And as always, reach out to your NEI representative with any questions that you may have. Thank you and stay safe.